Good morning, YouTube. Today we're going to cover a little bit about what is happening in the economy, what you can do to prepare a little better, and then lastly about what is really going to happen in the future versus what you're hearing about in the news and some of the things online that you're seeing. People telling you things have angles. They have an intention. They have an agenda. They have a reason they're saying what they're saying, and by the history of what they've been saying, you can kind of tell what is actually coming in the future, what to expect. And so first, let's go into this situation and say core inflation is based on the M2 money supply. Okay, so you have the impression that they've been handling inflation and working on inflation, and so let's see if that is true. So you look at this. This is the M2 money supply right here, and you will see that in February it was at $21.7 trillion. And today, after they've worked on it for 5 months, it's at $21.7 trillion. Okay? Now, in this period of time, I paid off debt. Lots of people and businesses paid off some debt, and they did that because interest rates are going up. Now, where is that reflected in this? It's not. You can't see it in here because the government spending absorbed that money that businesses take away. So the money is going from businesses and individuals that are paying off debt, and it is going into the government spending. So a higher proportion of the money being spent is being spent by the government. That is their plan. Okay? The reason you have inflation is two things. One is you are paying for the Green New Deal, which is a core cost to any business that operates anything that uses energy. And number two, the government is spending more money. You say that they're not. I understand the message you saw, but what about the student loan forgiveness? That was another spending of $300 billion or so. Plus, the money earmarked for COVID things has not yet gotten to the economy, and that is still coming. And they're handling not increasing this by increasing interest rates and taking money out of people and businesses' pockets. And so that is what you have to understand is actually happening. And I don't tell you this for political reasons because I don't care what you think about politically, but to understand what is happening allows you to prepare for what is going to happen. So let's go back a little bit and talk about what did the media say about inflation when we had inflation? Okay, if you remember, they said it was transitory. Okay, when they said it was transitory, they knew it was not transitory, and transitory was a lie. Okay, now they say they're going to raise interest rates a little bit, and now they're going to raise it more, and now they're going to try to get rid of jobs, and those are actually lies too, because if you think about it this way, they put interest rates at 4%. And with interest rates at 4%, they're saying, 2024, 2025, we're going to lower them back down. Now, if they didn't say that, no one would buy bonds and the government wouldn't be funded on their debt. And so they have to say that in order to get the debt funded. So they're saying, hey, interest rates will be, higher in 2023, 2022, through the end of 2023, and then they'll start going back down. Now, is that true? I don't know. Was the last thing they said true? Was the thing they said before that true? Is inflation transitory? And so if you're just buying this line, this narrative they're giving you, you probably need to get kind of a thinking process into your head to understand what's actually happening and what they have to gain from the situation. So, number one, what they believe today is the interest rates will continue to go up. And interest rates will probably continue to go up and be at the levels for 3 to 4 years from now. So you're talking about 2025 into 2026, and they do not know how high they have to go. Now, the words that they have said that the base interest rate needs to go to the 8 or 9% range. And the reason they said that is because back in the Volcker era, they had to raise interest rates above the core inflation rate. And they're trying to gauge what that is now. But right now they say it's between 8 and 9%. If you take the old measurement of inflation back in the Volcker day, we're more like 15% interest rate. in that change. So I don't know how high they're going to have to go, but if you just figure at a conservative estimate, base rate 8%, that gives you a commercial rate at maybe 10% interest rate. And how does that affect you? If you don't have debt, it doesn't affect you. It affects credit card debt a little bit, but usually credit card debt is at massive rates. But it would affect you if you buy a house or some things like that. And so understand that. Now, are we powerless in the situation? No. No, we should be taking very specific actions, and there are 3 things you should be improving. Number 1, you should be lowering your debt. First, you should be lowering your consumer debt that has variable rates of interest that you pay on it and not acquiring more. So this is not the time to go buy a car. Number 2, you should be accumulating cash. Cash and cash assets are a buffer for you to be able to buy things when they're at the right price or sell things when you can, when you need to, right? So picture this. I own a rental house and I have cash. Need comes up. I need $5,000 to pay my son's hospital bill. I'm trying to think of something that's not optional. And I have the cash. I don't sell the house. I don't have the cash. I sell the house. Whatever the market conditions are, if they're down now, I just lost $50,000. So your goal is not to lose money by having hurried decisions. So accumulating cash, and also accumulating cash with the mindset, in what situation would you invest in? Now, I'm going to tell you right now, this is not the situation to buy real estate. This is not yet the situation to buy your own house. This is not the situation to buy commercial property. It's mostly not the situation to buy stocks. Now, you could still have your dollar cost average going into, monthly VIG or index fund. That's fine with half your money going into cash, but you should not be out there buying individual stocks at this point. You have no idea what's going to happen in the market, and we could very well see a 50% decrease, and that would just destroy some of the individual stocks. And so dollar cost average, lower risk way to do it, and just let it go over time. Half your money is going into cash, and there's no clear number on the market. This is cheaper than it was, which is your perspective, but in the Great Depression there was a 1 to 8 decrease in stocks from 341 down to like 30 or 40, right? And so if you saw that today, that would be at least a 50%. Now right now the same people are saying interest rates going to 4%, it's only going to last a year and a half, are saying you could have a 15% decrease. So if they're saying that, in actuality you could have a 50% decrease. Is it going to happen? I don't know. But the situation you want to be in, if it happens, is that you can invest when it happens. And by putting a little bit in, trying to time the market as it goes down, that's not going to put you in that situation. That is when the opportunities are going to occur. When you see hysteria, when you see emotion in the market, you need to have not taken action. You need to be able to take action when you see that emotion. And that emotion is not the news people. It's your friends saying, oh my gosh, it's going down to 0. And so be prepared for that. The third thing you want to do, always, and improve your cash flow. You can improve your cash flow by paying down debt some. You can improve your cash flow by a side hustle, a side business, improving your business income, improving how you do your debt, all kinds of ways. Having a little bit of income on the side, or living on half what you make and putting the other part into wealth building, allows you to be in a situation that no one's in this, so you can take advantage of it, so you can use the situation to become wealthy, which this is the situation we're going into that makes people wealthy. But they're not all going to be wealthy, maybe 1%, and you have to act like that 1% to get there. And if you can't, then just fine, do what you're doing, no problem. And that's what I want to share with you today. I wanted you to make sure you understood those things, and I hope you have a great day, and like the video below if you would, and subscribe if you can, and talk to you later. Bye.